talk about the macros, the markets, the Reserve Bank, Raghuram Rajan's dilemma with HDFC Chairman Deepak Parekh. He's not panicking about the India story. Speaking exclusively to CNBC TV 18, Parekh said India has moved from a hopeless situation to a better one. I spoke to him just a short while ago and started off by asking him about his outlook for growth and the GDP forecast for FY14. Listen in.
No, you saw the first quarter's number. We had a 4.4% GDP growth rate, and I'm not as pessimistic as the BNP report and other reports. You know, you see agriculture is going to be going to give us good results. Best monsoon in last 2 decades, and all-time high food production, massive sowing of kharif crops, more area under cultivation, and even rainfall across the country. You will see bumper harvest. You will see food grain production cross the 260 million tons. And food increase in agriculture production will give you an extra 1% GDP growth rate. So I'm not as pessimistic. Service area will give you 7-8%. Industry is the one which is a spoiler, party spoiler. But I'm not saying we'll reach higher numbers, but we'll be able to maintain at around 5%.
Okay, but Mr. Parekh, you're confident about being able to achieve the 5% number on the GDP front. Let me shift gears and talk to you about the Reserve Bank. Do you believe Raghuram Rajan can hold rates where they are, given the fact that inflation continues to be on the higher side? There's immense pressure because of the sharp depreciation of the currency. Rajan doesn't seem to have too much elbow room.
You see, my view on this is slightly different. My view is that the short-term interest rates that have been increased have been unwarranted. The inverted yield curve that we have today, where short-term rates are higher than the long-term rates, I don't think the Reserve Bank has been able to achieve the objective for which they increased the MSF by 300 basis points, the LAF by restricting banks to borrow 0.5% of their demand and time liabilities and making 99% CRR on a daily basis. What was the objective of these 3 steps? The objective of these 3 steps was to contain the fall in the rupee. It has not succeeded. In fact, rupee has had a free fall. Why don't we just bring them back to the original level? We can't reduce interest rates. I agree, because inflation numbers are hurting, and as we increase fuel prices, as we increase energy prices, inflation will continue. But these short-term measures to protect the rupee has messed up your fixed income market, has totally messed up your bond markets, has messed up your equity markets, has taken liquidity out of the system. Neither inflation has come down, nor rupee has strengthened, which was the purpose of this. So I feel that the short-term interest rates which they have made so high, expensive, and that policy has not worked. Rupee is stabilized around 66. Let's hope it stabilizes around 65, 67, and let us concentrate on growth. Let us bring some liquidity into the system, because total lack of liquidity is impacting not the big boys, but the SMEs of the world. The small manufacturer, the medium enterprises are hurting very badly.
So Mr. Parekh, let me ask you this. If you're saying that the Reserve Bank's measures to curb the rupee slide didn't work, what then can the government, the Reserve Bank, do to tame the ferocious volatility that we've seen in the currency? What is your prognosis?
You see, Shereen, when you talk of the volatility, there are a number of reasons why the rupee has behaved the way it has. There are a number of reasons, like, there is shorting of rupees internationally, but the main reason is it's a fact that there's a larger outflow of currency, because there is unwinding in the United States. FII debt is going out very rapidly. FII equity has still not seen any major moves. But we must also appreciate that when the monetary policy was easy in the United States and European Union, who was the biggest beneficiary of inflows? India. Not South Africa, not Indonesia, not Brazil. India has been the largest beneficiary when soft money, easy money policy was there. So now when that easy money policy is gradually being withdrawn in the United States, who is going to be impacted most? India, obviously. But we must be prepared. and we must line up alternate sources of revenue or alternate sources of foreign currency, like the government has allowed IIFCL and Indian Railway and PFC to borrow $4 billion, and I expect some of them to hit the market shortly. We have to push on some disinvestments on whether it's Balco or Hindalco or whichever company there is a market for. If there is no demand, and if you take a view that we can't sell our family silver at such low prices, but the need is of foreign exchange, not of family silver. Your family silver will be worthless if you don't get in the foreign exchange. So we have to take these hard decisions, and I think the finance minister is trying his utmost best, and he is slowly succeeding, I would say.
Okay, Mr. Parekh, the last time we spoke, and this was several months ago, you were clearly frustrated with the policy paralysis. Today, if I may say so, you sound a little less frustrated. Do you believe that the policy response that we've seen from the government is enough to turn sentiment around? Because others would argue that while there isn't paralysis anymore, the decisions that have been taken are fiscally reckless ones.
No, Shereen, I still feel, and I agree with you, that there is total lack of confidence internationally on India, and India has gone off the radar of many multinational companies. The interest that they had on India, and India was on the radar of every multinational, has disappeared. That you are absolutely right, and it is because of our own doing. It is because we are unable to take quicker decisions. It is because we've taken far too long to make up our mind. It is because the Vodafone case is still not settled. A number of reasons are there. And the sad thing, according to me, is that in a very short period of time, we have made ourselves irrelevant to the global economy. Although 1 in 6 individual in the world is an Indian. 17% of the population lives in India. So I'm not disputing that. I agree that foreign companies have lost interest in India. But don't forget that India is a domestic consumption economy. It goes on domestic consumption. And I feel that with the festival coming, and I feel that with the increments coming, which normally come at this time, bonuses and all, I feel the spending power will increase. And we have not seen a huge slowdown in home loans. And fine, if we grew at 30% last year, we are growing at 22% this year. But still the growth is there, the positive growth is there. So I think having very gloomy, I'm not as gloomy. Yes, policy paralysis has hit us. Now if you see on the policy paralysis, you must, it's a coalition government. It is in the last year of elections. There are differences, always there are differences of views in any government with any two people. Now see, at least they have taken an effort, made an effort to have this cabinet committee on investments. You've heard the finance minister say that about 1.9 lakh crores projects have been approved. Now these projects are in port and airports and power and roads. They won't start kicking to the economic growth tomorrow. It will be a couple of years before they start giving you returns. But the logjam which was there in some of these projects have been removed. You take the other case of power sector. Energy is the biggest concern we have. SEB restructuring is on the way, that 50% debt of SEB will be taken over by the state government. You see 78,000 megawatts of power projects which were going to get domestic.
So you're saying several decisions have been taken, especially on the infrastructure side, by the Cabinet Committee on Investment. That's good decisions. But, you were talking about elections, you were talking about coalition governments. The fear is that perhaps we could see an even more fractured mandate come 2014. But corporate India has been rallying behind Narendra Modi. Do you believe with Narendra Modi at the center of a NDA-led coalition government or a BJP-led coalition government will actually be able to kickstart the reform process, get back on the growth track, or do you believe that case is overstated?
Well, I don't know whether the case is overstated, but if you when you meet Mr. Narendra Modi, he always talks about governance, food inflation, trust deficit. These are the subjects it's close to his heart. that he would try to reduce the trust deficit which is there between the center and different states, the governance problems which are there in India, the integrity and the governance issue, and food inflation. I think these are his key messages, that he is working towards these three objectives. And I think these three objectives hit the common man, hit the Aam Aadmi, hit the food inflation is the single largest factor that is impacting Indian household. Corruption, food inflation, these are the two main sectors, and security and safety, the safety of people. So that is really the trust deficit, the nexus between the politicians, local politicians and the police, and this is what is hurting the common man, and this is what is upsetting the middle class, the lower middle class in urban areas. So we'll have to wait and see. Let's see what the results, state election results.
Absolutely. Let's see what the results hold. But Deepak Parekh, it's always a pleasure speaking with you. A little less pessimistic Deepak Parekh joining